How to use the ITM Financial SigAlert Indicator. So once you've imported the ITM Financial SigAlert Indicator, you follow this powerful strategy step by step in order to secure a profit on practically every trade you place on the market. But before we move on, let me remind you an important concept. The ITM SigAlert Indicator is meant to be used as just that, a momentum-based indicator. It is not a robot or an expert advisor. You have to take other factors into account before trading an indicator that predicts just trends. Factors like other ITM signals and indicators that will make your trader's life easier, or the divergence on CCI, RSI at the current period, volume, etc. So now let's take a look at the chart. On the top of the chart, we can see here the normal candlesticks, and I've drawn some arrows here. So the red arrows indicate where you would set your stop loss, and the orange arrow here, the target, basically the limit that comes with the signal and indicate where to set your winning limit. And then finally, the yellow arrows represent the time, or let's say the benefits, let's say the difference between the entry and the exit price. So in this case, we've went long, so this would be the benefit between the entry price and the limit price we set. And here, as we go short, we also have benefits as we can see here. So now let's go to the bottom half of the chart that shows the ITM Financial SigAlert Indicator in action. So you can see here, if you look here, this is you can see which indicator we're looking at. And as you can see, there would have been two main opportunities to place your order. A, you could have bought going long at the beginning of the chart here, or follow the indication on the falling price and sell going short on the second arrow. So the basic strategy is you open your position when the second red or green vertical bar appears in the ITM Financial SigAlert window below in the chart. So here, where the big arrow is pointing to, this is the point where we would enter, or here we could enter here if we were going short. You can technically enter a trade on the first green or red bar. The only downside of doing this is that your position will not really be confirmed, as there could be pullback and or reversal. So waiting for a second bar ensures that your intended trading position is indeed valid and you are safe to go ahead and open the position live. So the second step is you would place your stop loss 2 to 3 pips below when going long, or through 2 to 3 pips above when going short of the previous candle, assuming that you're using candle charts. So in this case, for example, there's an error here where we have the stop loss, and here is the other stop loss if we went short. Okay, so to give an example, if you buy at 1.4000 going long, the previous candle low was 1.3990. So you would therefore set your stop loss just 2 to 3 pips below, which would be 1.3988. The next step is to limit your benefits. And this is optional, but I would do it. So each signal comes with a target price. See the orange arrows as I've drawn them here and here, and set your limit to this target price. Additionally, as the movement goes into the right direction, adjust your stop loss to assure benefits already achieved. It's now up to you to relax and wait to hit the limit price and cash in your benefits, or continue adjusting to squeeze the maximum out of the trend. I have learned my lesson. Remember, I lost more than $50,000 in just a few minutes, and therefore prefer a more conservative approach. Cash in and take a new chance when the next signal arrives. And if you want to go short, you'll be basically doing the exact opposite. So, according to several thousands of tests the ITM financial team had performed, by opening even a lot of them live positions on the market, this strategy works extremely well on the 15-minute M15 to 4-hourly 4H time frames. The ITM financial team has tested it on several major foreign exchange pairs and have received the best results on the most traded ones like the euro and US dollar, the British pound and US dollar, the US dollar and the Japanese yen, etc. So I hope this was a short introduction in just one example of one of the signal indicators that you would get from ITM Financial.